Today session is the first part of GST registrations. Here we will discuss about the persons who has to register. This is covered by section 22. Persons who do not need to be registered and persons who are compulsorily required to be registered. There are three categories and voluntary registration can always be done or taken by any persons. So first part, we will come to section 22, which says who has to register. It is linked with the aggregate turnover. Aggregate turnover is 20 lakhs in case of normal estates and 10 lakh in the case of special category estates. We will come to the subsequent slide where with effect from 1st January 2020, first limit of 20 lakhs has been made to 40 lakhs in case of goods and 20 lakhs is still there in case of services. So we will touch upon this on the second slide. Here we are saying that every person who crosses the aggregate turnover exceeding a certain threshold is compulsorily required to be registered. This registrations is not required in every state in a country. It is required only in those states from where he is making taxable supply. Another question arises in case of transfer of business. When X persons transfer a business as a going concern to Y persons, then when Y has to take registrations, the answer is given by section 22, which says it is from the date of transfer of business as a going concern. Similarly, there is another case where business is transferred under business arrangement under the company law or under the NCLT. So from which date the registration is required in case of transferred unit by the transferee. So it says it will be from the date on which the registrar company issues a certificate of incorporation giving effect to such order of the High Court or the tribunal. In the earlier slide, we have talked about registration limits in section 22. In case of goods only, with effect from 1st January 2020, it is 40 lakhs. This is also subject to the condition that the concerned state has opted this. If the concerned state has not opted this, then it is 20 lakh as given in the previous slide. In case of services, oblique goods, it is 20 lakh in the case of normal estates. In case of special category estates, it is 20 lakhs if opted by special category estates. Otherwise, it is still 10 lakhs. If it is a combination of goods and services, then it is 20 lakhs if opted by the special category estates. Now we come to section 23, which says who do not have to register. So here, persons engaged exclusively in the supply of goods or services or both, which are non-taxable or wholly exempt from tax, need not take registrations. Suppose threshold limit of services is 20 lakhs in normal estates and person supplying services is 22 lakh in the estate. Then if he is exclusively supplying the services of 22 lakhs in a state, he need not take registration. But if he is not doing it exclusively and also supplying some services which are not exempt, then he has to take registrations if he cross the threshold limit of registrations. Similarly, in the case of agriculturist, he need not take registrations even if his turnover is above threshold limit. Similarly, person engaged exclusively in the supply which are under RCM need not take registration. Example are advocates, where if where they supply the services and the recipient of the supply of advocate services pay the tax under RCM. In that case, persons advocate need not take the registrations, even if their value of services is above the threshold limit. Similarly, government by notification specify the category of persons who may be exempted from obtaining registration under this act. We have to take this note that this section 23 overrides the provision of section 22. Now we come to the compulsory registration under section 24. This section 24 override the provision of 22 and 23. It says interstate supplier has to take compulsory registrations if X supplier is transferring even 100 rupees goods in the course of interstate trade, then he has to take registrations. But in case of services, there are one notifications, exemption notifications, which says that if it is a normal estates, then up to 20 lakhs, he need not take registration. And in case of a special category estate, it is 10 lakhs. But this is exclusively in case of supply of services interstate. Similarly, casual and non-taxable persons has to take registration irrespective of the threshold. Similarly, persons who has to pay tax under reverse charge mechanism has to take registrations. Electronic commerce operator has to take compulsory registration irrespective of the threshold. Any persons who are required to deduct tax under section 51 has to take registrations. Similarly, agent we will go to the section 182 of the Indian Contract Act. Means they are representing principal. They have to take registration compulsory. Similarly, input service distributor basically is an office of the supplier which collect services and distribute it among the consuming units based on certain proportionate principles. So they have to take compulsory registrations if they has to distribute the common services received at the head office or at a certain certain location. Every person supplying OIDR services from outside India to unregistered person in India has to make compulsory registrations, and they have to collect GST and deposit it with the governments. This is to provide level playing fields for the same type of services being provided by supplier in India, which are taxable, and in absence of this provision, it would be exempt in case of overseas supply of ODR services. Now we come to the conclusion, who do not have to register. Person engaged exclusively in supply goods or services that we have already covered. this we have already covered. Now we come to the conclusion. What is the definition of aggregate turnover? Aggregate turnover means taxable supply plus exempt supply plus export plus interstate supplies. Now we will come to these one by one, and total of these is aggregate turnover. Taxable turnover. Taxable supply means a supply of goods or services or both which is leviable to tax under this act. It excludes no supply. No supply means any supply which is not a supply. GST Act, there is a Schedule 3 which specifies activities which is not a supply, such as providing services by employees to the employer. Second point is exempt supply. Exempt supply means supply for any goods or services which attract nil rate of tax or which may be wholly exempt from tax under Section 11 or under Section 6 of Integrated Goods and Services Act and include non-taxable supply. Now we have to decide what is the non-taxable supply because we know what is exempt supply. Exempt supply which has been exempted by the governments. Export of goods with a grammatical and export of goods means taking goods out of India to a place outside India. Export of services means supply of any services when the supplier of services is located in India, the recipient of services is located outside India, place of service is outside India. These all things we will discuss in subsequent presentations on exports.